And welcome back, the Ray Lucia Show with Gene Pastula, co-host today, certified financial planner, the purveyor of SafeMoneyMonitor.com. His phone number, if you want to have him monitor all of the different annuity products, long-term care insurance products, and let you know which one might be best suited for you, 800-809-6783. I guess part of the problem, Gino, is the fact that there are thousands of different iterations. And somebody's got to know all that stuff to be able to make the right recommendation.
Yeah, and I just want to say, because I think I have a list of 20 on my desk of people that I'm supposed to get back to because they've emailed me or called me or whatever. Hang in there. I'll do it. I'll get to you.
But it's good. I mean, and you should take your time and do all of your due diligence. But what I love about what you do is you're like the trainer's trainer. You've got 5,000, 6,000 brokers all around the country that you train and teach. And I did that in the securities industry, as you know, for a number of years. Quite a good gig, by the way, if you can get it. But when you're if you're training the trainers, you got to know your stuff, and you have to surround yourself with people that know their stuff, because there's no way you know everything. I don't think.
Almost, but but I can assure you, when you ask a question, it'll be one of the few that I don't know the answer to.
All right, so before the break, I was talking about Robert Powell's article that he wrote, I don't know, it's probably a year ago now, that I've kept. 6 ways to safely spend more money in retirement. And most of the time we don't think about safely spending more in retirement. And he talked about some of the obvious: optimizing Social Security, buying a life annuity, calculating a safe withdrawal rate. He does say hire a financial advisor, because the stats are in on that one too. If you have the right financial advisor, you do end up with more potential income if they follow best practices. But number 3 on his list is fascinating to me. He's basically saying take money out of your portfolio and buy long-term care insurance to address fears of unexpected health and long-term care costs in retirement.
Yeah, and you got to do that before you have the fear.
Yeah, because once you have the fear, that means you have the ailment.
I just got a call the other day from a gentleman who I talked to probably 9 or 10 months ago as a result of being on the show. And we talked about setting up a long-term care plan. And basically, he just he didn't have the enthusiasm that he needed, didn't do anything. And a week or so ago, he called me, and unfortunately, only a mild heart attack, okay, but he's got he's got some issues that are not going to go away, and certainly he's not going to be able to do anything with insurance, and it can develop into a situation where he's obviously more likely to need care, and that happens all the time, and now his options are nil, other than to just make sure and save some money and be able to take care of that. And so the first thing is to understand that even though you don't think that there's a chance or there's a risk, the stats don't lie. And when you're talking about statistics that exceed 50-50 that you're going to need to pay for care, and they come from all different directions. It's not just me saying it. The insurance companies that are paying the claims are saying that. The government are saying that. The whole thing. So, the idea is, how do you go about doing that? And for people who have money in a portfolio that they're not that they're not using for income, they don't need it to support their lifestyle now, the savings emergency funds, if you will, then those individuals can allocate funds to a special kind of insurance contract that we developed years ago that is really designed more of as an investment than as a pure insurance, meaning that you can move money into a life insurance policy that will pay a benefit. I mean, you're for sure gonna die, but the idea with this life insurance policy is that if you need care first, then the insurance will pay for that. Will pay you before you die.
Yeah, what I love about that particular product is for all of us skeptics out there that are sitting on the fence, that are afraid to act, afraid to move, are paralyzed by our analysis, you can just simply move money from one pocket into the next pocket. And if you don't like it in 2 years, just pull the money out of your right pocket and it didn't really cost you anything. You've got a principal guarantee. Did I say that right?
Yeah, there's obviously various forms of this, but if you have money that, and of course probably the largest number of contracts that we put in force are as a result of simply moving money from a safe, a bank account or something of that nature. People are starting to sell bonds at this point because they're anticipating increases in interest and reduction in their bond portfolio balances, and so they're moving it in here. But it's safe and it's liquid, and you can get the money back in fairly short order. There are some that actually tomorrow you can. It's got an immediate money back guarantee. Others take a year or 2 or 3, but the bulk of it's there and available to you. So it's considered a very liquid investment. But if you can take, and we'll use $100,000 because the math is easy. If you can take $100,000 from a bank account and put it into one of these, and lock in, let's say, a death benefit that says if this is in place when you die, your heirs will get $200,000 tax-free. That can turn out to be a really quite decent investment or savings account. But then what they do is they say, if you need long-term care prior to death, that $200,000 can be used to pay for your care. And if you use all of that, and you're very unfortunate to have more than a couple years of need, they'll throw in another 200 and another 200. The leverage on these things is amazing. And of course, it's sort of there's a smorgasbord of these from just a few quality companies. And our job is to help you understand anywhere from I have a lot of money that I can do it just like you said, Gene, on TV, or I don't have that kind of money, but I could put in $5,000 a year or $10,000 a year and build it that way. And so we have versions that do that, and we can explain the alternatives and what have you. But everybody should look at these and look at long-term care planning, because I guarantee you, when the time comes that whatever that event is that triggers it, says
the mild heart attack,
the mild heart attack, or your diabetes is really starting to act up and it's starting to impact the rest of your health and the variety of other things, Parkinson's, you can go on, strokes, etc. And then you know that you're going to need that care for some period of time, and if you know that you thought about it seriously at one point and then didn't do it, that's got to be really frustrating. I mean, that's got to be make it even worse.
I did some simple mathematics. You could go out and buy some municipal bonds right now, 20-year munis, get yourself about 3.5%. Okay, so you die if you're 65, you're going to die 20 years from now, say. So you get the 3.5% each year. Great, perfect. If you put $100,000 into this life insurance policy, you never needed long-term care, and you died 20 years from now, you got $200,000. That's a 3.5% return, tax-free, just like a municipal bond, and you had, quotes, free long-term care coverage. Now here's the thing. It's more likely than not that you're going to enter a nursing home before you die, or you're going to need some kind of assisted living before you die. And you can burn through that $100,000 really, really quick at $5,000, $6,000, $7,000, $8,000 a month, especially if it happens 10, 15 years from now. So this happens to be one of those no-brainers because, as I said, if you're on the fence, the cost of not doing it far exceeds the cost of doing it. The only cost of doing it is what you could have earned on the money had you left it in the bank, and you know what the bank's paying.
Butt kiss.
Butt kiss? Okay, whatever he
Well, you
said.
did answer to your pants. I mean,
SafeMoneyMonitor.com. Gene will get to you. He's a very busy guy. It's because he's the best in the business. SafeMoneyMonitor.com, 800-809-6783. Your emails are next. Stick around. The Ray Lucia Show continues. Oh, by the way, you can email me, raylucia.com, RayLucia.com. Some good emails coming up. We'll invite Bobby Wu back here. Gino, thank you for coming by here, bud.
I love it.
Take care.